Now let us look at assets that are movable. Ne? We move from here to there. Assets that are movable. We are saying those assets that are movable are those that are not turned into cash. Like what? We'll say the furniture that is valued only. Once we sell this property, we will not reflect it under movable property. We are going to reflect it under claims in favor of the estate. We are reflecting it under movable property because it was not turned into cash. Ne? Motor vehicle will reflect the motor vehicle which is only valued, that is not turned into cash under movable assets. And those that we say only valued. If we have shares LTD, in other shares in a public company, these shares are not sold. These shares are only valued. Who values shares in a public company? Who values these shares? Stockbroker, ne? If these shares are only valued, they are not sold, we reflect them under movable property. Subheading, movable property. Are we together? Okay. So we know what we are dealing with under movable property. Under claims in favor of the estate, those that are cash, how do we deal with them? What are the examples of those?
The bank accounts.
That will be policies, cash. Let's start with policies.
Yeah.
Must we start with policies or must we start with shares?
Policies.
Here, ladies and gentlemen, when you take out a policy, obviously you want money to be paid. That is the purpose. Ne? But here we are dealing with policies on the life of the deceased. Life assurance policies. Can you see here, ladies? Okay. Life policies only, not short-term policies, no. The policy on the life of somebody. Now, the policies that will be reflected under claims in favor of the estate are the policies that did not nominate a beneficiary. Put it in another way around. A policy that nominates a beneficiary will not be reflected in your liquidation account. Will not form part of your claims in favor of the estate if it has a nominated beneficiary. But what about that policy that has a nominated beneficiary who has since predeceased the deceased? Are you going to reflect it under claims in favor of the estate? It has a nominated beneficiary, but this nominated beneficiary died many years ago. Are you going to reflect it here? Yes. Ne? It falls back into the estate of the deceased. So when you see such a thing in the exam, don't say, wow, what is this now? Ne? Don't be surprised. Ne? So you know what we're talking about. So we are dealing with life policies, ne? That are paid into the estate. Now you must know the difference when you deal with policies between life cover value or maturity value or surrender value. Ne? When you say maturity value, it's the same thing like we say life cover value. Ne? So you must know the difference between maturity value and surrender value. What is the difference? Let's start with maturity value. What is maturity value? It's when the policy is on the life of the deceased and the deceased has died. That policy has matured and the total proceeds will be paid. Ne? Surrender value is when the deceased took out a policy on the life of somebody else and that policy has not matured. Ne? Let us demonstrate that. Here we have a wife. The wife takes out a policy on the life of the husband. And what is the wife saying? Because she's the owner of the policy. She's paying the premiums every month without fail. Ne? Waiting for the policy to mature. When will the policy mature? When the husband dies. So what does the wife do every morning? Goes to the husband, give a kiss to see whether the husband is still alive. Ne? And when the husband responds, it means that the policy has not yet matured. Ne? But that time when he kisses the husband in the morning and he does not respond, it means that the policy has matured because the husband has died. Are we together? That is when we talk of maturity value, when the policy has matured and the total proceeds will be paid to the wife. The wife is the beneficiary in this estate. And since that the wife is the beneficiary in this estate, such a policy will not be reflected in your liquidation account because it has a nominated beneficiary. But because God works in mysterious ways, what happens? Is the wife who dies first, ne? And the husband is still strong, ne? Because the husband every morning drinks prosidine and herbal tea, so he's still strong. What happens is the wife who dies first, she's no longer alive to can pay for the premiums. We are now dealing with the estate of the wife as executors. In this estate, we decide to surrender the policy and get the surrender value. We call it a surrender value, but then it is cash that we are going to get into the estate. That is why we are going to reflect it under claims in favor of the estate. So that is the difference between surrender value and maturity value. Is it making sense? Yes. Good.
So there is normally on the questions, there is normally some percentage given there. 6%. Is it just to confuse us?
I will deal with it later, don't worry.
I've been confused.
But if she died 5 years ago, he would have had the cash in his bank by now. Won't be a surrendered policy, you would already have the cash.
If who dies first?
If the wife dies first.
No, if the wife dies first and you are administering her estate, and then as the executor in her estate, we surrender the policy. We take that.
3 years ago and her estate's been wound up.
And it wasn't surrendered, then what?
If her estate was not dealt with, or it was wound up and we don't know, or we didn't know of this policy.
Or maybe it was ceded then to her.
Let's not complicate it because then we will be lost. Ne? Isn't it that now we were explaining the difference between surrender value and maturity value? Yes, that is how it works. But we assume that everything is done in order. We don't have complications. Ne? Yeah, because when we have complication, then we have to negotiate and hold meetings and decide what is in the best interest of the estate and so on. Ne? In the exam, there are no complications. Straightforward. You must know whether it's a maturity value or a surrender value. Ne? Yeah. Also, with regard to policies, is it possible for the deceased to have taken a loan against this policy? Is it allowed?
Yes.
Do you want to find such a question in the exam?
No.
You want to find it? I like you, ma'am.
Yes.
I like you. Because now, by now you know how to deal with it because it was part of your assignment. It's easy. I thought you'll say, yes, we want it because you know how to deal with it now. If the deceased took out a loan against the policy. Ne? There are two ways in which this question can be asked in the exam. We'll tell you that the insurance company gave you a check for how much? 370,000. After they've deducted a loan amount of how much? Let's say 30,000. Ne? In the liquidation account, which value are you going to reflect? 400. Because 400 are the total proceeds. Regulation 5.1c Roman figure 4 says you must reflect the full proceeds of the assets in the liquidation account. Ne? So that is why here in the liquidation account you reflect the full proceeds, which is 400. But under the liabilities, as a contra entry, you are going to put the loan amount of 30,000. Nowhere should you reflect the check that you got. Are you together? Yes. Sometimes the question becomes so very friendly and said that the total proceeds of this policy is 400,000. The insurance company gave you 370 after they've deducted 30,000 of the loan. Already there you know. Yes, it's 400,000. That you reflect under your claims in favor of the estate. Are we together? Any question regarding policies? With regard to the premiums that were paid and all those things, they are not relevant now in the liquidation account. They will be relevant when we come to estate duty. So don't worry up to this stage with regard to the premiums that were paid. We'll deal with them under estate duty. Here you only reflect either the surrender value or the maturity value. Ne? We will not ask you a question regarding a policy that is surrendered and that is going to be taken over by the surviving spouse. If we ask you a surrender value, it will be the value that is turned into cash in the estate. Ne? So that policy will not be ceded to the beneficiary, no. It will be surrendered if we ask you that type of a question. Are you fine with policies? As long as you know the difference between surrender value and maturity value, and you know that there can be a loan against this policy, and you know that a policy payable directly to a beneficiary does not form part of your liquidation account. We'll deal with it later under estate duty. That is what you should know regarding policies. Now, let us deal with shares. We are fine with policies. Nah? There's no way you can find an exam question that does not have a question on policies. I think by now you know from the assignments. Yeah. Let's deal with shares. Shares, let's go back to shares in a public company. If we give you in the exam shares in a public company, quoted shares. When we say quoted shares, we simply mean shares in a public company, JSE shares. Don't say, but what are they talking about? Quoted. No, what is this? No. Shares in a public company. Those that are valued or sold by the stockbroker. If we say these shares are valued at this amount, but sold for that amount, which one are we going to take and reflect in our liquidation account?
From the sale.
Not the value. Why not the value? If the value is less and the selling price is higher, which one are we going to reflect in the liquidation account?
The sale price.
The sale price. Why not the value? You don't like the value? Okay. Please remember this general principle. An asset of the deceased that is sold during the course of liquidation must always be reflected at its selling price in the liquidation account. An asset of the deceased that is sold during the course of liquidation must always be reflected at its selling price in the liquidation account. So in the exam, you don't have to scratch your head. If we give you the selling price and the market value, you take the selling price because you know of this general principle. So if the shares are valued and sold, you take the selling price. Therefore, you will not reflect these shares under movable property, but under claims in favor of the estate, because they will now be turned into cash.
Is it the same principle that we're using on the property? For instance, if a property is valued at 790, for instance, but we are selling it at another price, we will only reflect the selling price, not how much it's valued for.
Let's deal with what are you referring as property. Movable property. Any movable property that is sold during the course of liquidation, even if we have the value, will reflect it at its selling price under claims in favor of the estate. Let's go back to the immovable property. An immovable property, even if sold, you still have to reflect it under immovable property.
Oh, okay.
And instead of saying valued at, then will be sold for this amount. But still described it in full under immovable property. Are we together? Yes. We'll always give you shares in a private company. Shares in a private company will always be given to you at the market value and the selling price. Always. And you'll see later when we deal with estate duty why. So in the liquidation account, we are going to reflect the selling price of the shares. Shares Pty Ltd, unquoted shares. Ne? Shares Pty Ltd will be reflected at their selling price and put under the heading claims in favor of the estate because it's cash. Are we together? Yes. Any question regarding shares? You are fine. Let's briefly deal with investments, cash. You see, when you deal with investment, that is where you should read the question carefully. Because in that question that deals with the investment, you have to find out if there is interest after date of death. If there is interest after date of death, we are not going to reflect it in your liquidation account. We are not going to reflect it under claims in favor of the estate. Where will it go to? Exactly, income and expenditure. So where there's a question on investment, the first thing that you should do in the examination is to say, is there interest after date of death? Subtract it and put it aside. Ne? And the balance thereof, it means that that is the capital and the interest as at the date of death. So here, let me just page through. When you come to the investment, always, ladies and gentlemen, reflect the capital amount and what? And interest at date of death. For our purpose is for the marks. Ne? On investments, please reflect the capital amount and the interest. Which interest? At date of death in the liquidation account. Ne? Practically, you know, when after you have received the letters of executorship, you write a letter to the bank requesting a certificate of balance. That certificate of balance, you request it as at the date of death for this purpose. When it comes, it will tell you what was the interest at date of death and the capital amount. And then when we close that account, you find extra cash. You say, look, what is this now? Don't be surprised. That is interest after date of death. Now, don't be excited and say, no, I've robbed them. They've given me extra now. It's interest after date of death. Ne? So therefore, in the liquidation account, we are going to reflect the capital and the interest of date of death. Then you get a mark that, you get a mark there.
So we have to separate them.
Separate them, just like in the certificate of balance, they've separated it. Ne? The question is, the executor recovers 100,000 on this investment. Included in the 100,000, there is interest of 10,000 as at the date of death, and the interest of 5,000 after date of death. Ne? Therefore, you are going to take the 5,000 and put it aside. Ne? Then you are left with how much? 95,000. Ne? On this 95,000, the set of facts tells you that interest as at the date of death is 10,000. Why do you want to write a different amount? You write 10,000 interest at date of death. So therefore, from 95,000 you minus 10,000. How much is left? 85. It means that it is what? Is the capital amount that was invested. And therefore, that is why we give you a mark for the capital and a mark for the interest at date of death. Don't say, hey, but no. Don't say, maybe I'm cheating. Why do I write the same amount of interest? Maybe let me change it. We are telling you, this is the interest at date of death. Write it as it is. We are not tricking you. Ne?
Please repeat the capital amount again.
Okay. The question is, the amount that is recovered is 100,000. The question is specific to say, interest as at date of death included in this 100,000 is 10,000. And included in this 100,000, we also have interest after date of death of 5,000. Now, what did we do? Because we know our story. We took the 5,000 of interest after date of death. We'll deal with it later.
Okay.
Now we are left with 95,000, not so.
Yes.
But the facts itself tells you that the interest at date of death is how much? 10,000. That is what you do. Ne? And don't feel guilty like you are cheating. You are not cheating. That is the information that is in the set of facts. Ne? Feel free to write interest at date of death as given in the facts, 10,000. Then you know that the capital amount is 85,000. Yes, madam?
Can I ask, is it incorrect if you just include it on, and then on the notes underneath, and then you write capital interest?
Is it A?
Is it still fine if the whole total value you included it, but then on your notes?
Do you mean that you just write
95.
I just write 95, and then on the notes you separate capital interest to show where the 95,000 is from? Or do you have
It's
to
not a
separate?
problem. It's not a problem. We have noticed that we have given marks where on the narrative side we have written 85,000 and 5,000, ne? And 10,000. But then we did not give you a mark for 95,000 because the mark allocated on this part is 2 marks. So we cannot give you 3. Ne? Yes. So it's either we'll give you this and this, but if you only wrote this, we'll give you 1. Ne? Yes. Are we together? So that is how you deal with the investment. We can ask this question anyhow. Ne? Your starting point is, in this investment, is there interest after date of death? Shares in a public company. It is possible that there are dividends that can be declared on those shares in a public company. Now, the dividends, if they are declared, where are we going to reflect them? Are we going to reflect them in the income and expenditure account or under claims in favor of the estate? Okay. The deciding factor is when were the dividends declared. It doesn't matter when are they payable. Ne? If they are declared before date of death, they will be reflected under the liquidation account under claims in favor. If they are declared after date of death, is when that they are reflected where? Under the income and expenditure account. So I just wanted to emphasize there that you should look as to when are the dividends declared in order to decide whether you're going to reflect them under the liquidation account or under income and expenditure account. Are we together? Okay. Then we have covered the immovable property, movable property, and claims in favor of the estate. Ne? Then we arrive at our total assets. Our total asset, that value is very important. But for practical reasons, in terms of the examination, it doesn't matter what type of an item is given to you. You are going to look at the question paper and say, is this item an asset or liability? Ne? Then we'll say, this is an asset. That is a decision that you must make, whether this is an asset or a liability. Is this asset as at the date of death, or does it come after date of death? Then we'll say, as at the date of death. Therefore, you are going to reflect it in your liquidation account, step by step. So this is your thought processes in the exam. Is this asset an immovable property or movable property? Then we'll say, this asset is an immovable property because it's either a house or a farm or sectional title. Then you're going to put it under this subheading, immovable property. Or you'll say, but this asset is movable property. If it's movable property, then we're going to say, is this movable property turned into cash or will it be awarded as it is? Then you say, no, this one, we are only given a value. It means that it is not cash. Therefore, I'm going to reflect it under movable property because I'm going to provide it with a divestment note. The divestment note will indicate who's going to get this property. Ne? And then you look at the next one and say, this is an asset. It is a movable property. But this movable property is cash. So therefore, this cash will come under the liquidation account under the subheading claims in favor of the estate. But I'm not going to provide a divestment note on this cash because it is not a required of the regulation. So they can give you any type of asset. It's for you to decide whether this is an asset or a liability. If it is an asset, whether it is immovable or movable. It's your decision. Ne? If it's movable, was this turned into cash or not cash? Then you will add all those together in order to arrive at what? Your total assets. Any question on your total assets? It's obvious that we cannot deal with any type of asset. That is why I'm saying it is for you to decide when you are given set of facts. Ne? But then what I know that does not form part of the liquidation account are the fund benefits. Pension funds, even if we give you in the set of facts, they do not form part of your liquidation account. Now don't include them. They are excluded in terms of Section 37C of the Pension Funds Act. Ne? But this one that we are referring to, I'm not sure of it, and I'm not going to put it in the exam. Ne? Okay. Any other question?
Sometimes the pension comes to the estate.
All right. For the purpose of the exam, we know that they don't form part of the liquidation account. They are excluded. Ne? Because if you include them, then it's going to do what? It's going to affect your total assets. Remember that from your total assets, you are going to calculate executor's fee and master's fee. Are we fine with our total assets? Let's go straight to the liabilities. Ne? Under liabilities, ladies and gentlemen, the way we have asked for the liabilities in your, under your assignment, that is how we'll do it in the exam. I don't think we'll change the style. And obviously, you also want us to keep it that way, not so. Because we have, that is why I said, after today, we'll know what to put in the exam with your input, not so. So this is how you want it. So we'll give you your total liabilities. Don't exceed the amount that is given to you. And we'll ask you to specify the liabilities. Now you're going to start with the administration expenses. Ne? Under the... Yes, madam?
Can I ask a question before we go to
Yes,
administration expenses? When we find a holiday club, where do we put it?
I won't give you a holiday club. Ne? That is why I said somewhere you have to make a decision when we give you the assets. But I can be fair to you now. I don't think we'll give you complicated things to think whether is this an asset or not. Ne? If you want those complicated things, fail this one and we'll get it in the supplementary exam.
But to answer her, I'm not sure if someone can correct me. Holiday club timeshares, ne? You would put them under movables. Immovable property.
If it's awarded.
If it's awarded, yeah.
Only the veil. That is why we have thought processes that we dealt with. Is this an asset? Is this asset a movable? Is this movable turned into cash or awarded as it is? Ne? So you'll make that decision. Ne? Okay. Can we move to the administration expenses? There we are going to deal with what? Section 29, advertisement. We said in the government gazette, how much is the government gazette? 37 rand 82. Ne? And the newspaper, you'll make a reasonable amount. Ne? You know it by now. Ne? But this one is standard to all of us. It must be 37 rand 82 cents. Ne? You are going to make provision for what? For section 35, also in the government gazette and the newspaper. Government gazette, you used the same amount that we've used under section 29. Ne? And what else will you put here? Let's start with postages and petties. Ne? Postages and petties. How much are you going to put?
260.
The maximum that is allowed by the master is 260 rands. If you put any amount above 260 rands, we are going to make it wrong.
But now, 260, what if you're tax-paying company? Then you must add 39 rand, it's 299.
We'll give you wrong. Ne? Yeah. So we allow for the maximum that is allowed by the master. But if you put 150 or less than 260, it's fine. But not above that. Ne? And then bank charges. Which bank charges are we referring to? The bank charges in the estate. Ne? Usually you'll make reasonable amounts. Ne? And we're going, so these are the bank charges to date in your bank statements, not so. And then we're going to make provision for what? For the bank charges. Ne? After drafting this account, we're going to make an estimation and say by this time the bank charges will be this much. Ne? Okay? And what else? What else? Valuation. Valuation costs of the immovable property and the movable property that was not turned into cash, not so. So valuations. And what else? Yeah, don't include those.
What about SARS? SARS doesn't come under tax?
It is not an administration expense, ne? Okay? What else? We'll come to that. Transfer cost, there is an immovable property that must be transferred to the beneficiaries. If we have valuation by stockbroker, then there will be broker's fees. Ne? Obviously, we cannot state all of them. Ne? But I want to come to the main ones. Yes, ma'am.
Just a question. If you write provision for transfer costs, they only gave a half mark, not a full mark.
Yeah, in other words, the mark that is allocated for transfer costs is 1 mark. So because of we have written transfer costs and provision for transfer costs, so they shared that mark. Ne? Because if we are going to give more marks of the municipal and all those things, we are going to exceed the allocated marks for that.
All for the first item and all for
Yes,
the second
yes.
item.
Ne? Okay, let us come to the main ones. Under the administration expenses, the executor's fee. Ne? How much is the executor's fee? 3.5%. Ne? On what? Total assets. That is why we said total assets are very important. If your total asset is wrong, obviously your executor's fee will be wrong. Now read the question carefully. It will tell you whether the executor was registered for VAT or not.
Yes, I want to.
And if it's not registered for VAT, we are not going to include VAT on the fees. But if it's registered for VAT, then you'll include VAT on the fees. Assignment number 3, there was no VAT because the executor was not a VAT vendor. Assignment number 4, there was VAT because it was registered for VAT. So that information will be there in the facts, even in the exam. Are we together? Okay. And then master's fee. There are those who still use 600 Rand as the maximum of the master's fee. The situation has changed. Ne? We have moved on. Ne? How do we calculate the master's fee? The master's fee. Where the value of the estate is less than 250,000, the executor will issue the letters of authority. There will be no master's fee payable. Now, because we are dealing with the estate where the executor is being appointed, the value of the estate is above 250,000. So therefore, master's fee between 250,000 up to 400,000. This is the situation from the 1st of January 2018. Ne? The master's fee payable here will be how much? 600. And thereafter, when we say thereafter, after 400,000, for every complete 100,000, let me write it down. For every complete 100,000 rands, we are going to pay a master's fee of how much? 200. Ne? The maximum of master's fee that is payable is 7,000. This is the present position. But what do we mean by for every complete 100,000, we pay 200 rands? If our total assets is 500,000, ne? Then we'll say up to 400,000, we pay 600. From 400,000 to 500,000, do we have a complete 100,000? The answer is yes. Therefore, we add 200 rands. Ne?
200 to 600.
That's correct. Ne? Yes. if our total assets is 550,000, for the first 400,000 is 600 master's fee. Ne? From 400,000 to 500, we have a complete 100,000, then we add another 200 of master's fee. Ne? From 500 to 550,000, do we have a complete 100,000? Therefore, we don't add anything, not even half. Don't say, oh, 50 is half, maybe it's 100. So we don't add 200,000, ne? Because it's not a complete 100,000. So we'll be adding all these 200 rands for every complete 100,000 until we reach 7,000, then we stop. Our master's fee cannot exceed 7,000. That should tell you that if your total assets, we have 3.6 million and above, we are going to pay the maximum of 7,000. But if your total assets are less than 3.6 million, it means that you must calculate your master's fee. Are we together? Yes. So this is how you calculate your master's fee. The claims in favor of the estate, ladies and gentlemen, are given to us in a set of facts. What will be those? If there is a bond over immovable property, that is a claim against the estate. Ne? If there are outstanding amounts on the financing of the movable assets, that is a claim against the estate. We are not going to make up the claims against the estate. They will be given to us in a set of facts. Ne? The amount of a loan on that policy, it is a claim against the estate. Ne? With regard to the funeral expenses, it's not a problem if you put it under administration or claims against the estate, but then practice has evolved to put them under claims against the estate. Ne? Yeah. So there is no fast and strict rule with regard to them, but then for us, just put them under claims against the estate. Ne? But we won't make you wrong if you put them under the administration expenses. Ne? But mostly, they'll be given to you in the set of facts. If we don't tell you of the municipal outstanding amounts, don't put them. Ne? Yes. So with regard to the liabilities, I don't think you'll experience any problem. You'll just be guided by what you have so far in your assignments. Ne? So it can be difficult. Then we are going to add our... Yes, ma'am.
So what you mean is, on the question paper, if it says the liabilities of the estate is 200,000.
Yes.
You mean I mustn't add other things to make it 200? Because sometimes sometimes we
just put in things to get to
yeah, it's on the question paper and then it's not up to that amount.
Yeah,
But it just says on the...
If we say your total liabilities should be 200,000.
yeah.
Is it there in the question paper?
Ne? Yes. In the question paper is there. So don't exceed 200,000 of the liabilities that we get.
So I can add other things of my own to make it 200 after adding everything that is
Yes,
on the
you
question.
can do that. It will depend on us whether we'll give you a mark for that or not. As long as included there what we have allocated marks with regard to the necessary ones for administering that estate are there. Ne? Yeah. Are we okay? But don't exceed this amount. In other words, don't want us to conform to your calculation, conform to us. Ne? Because fortunately we are in a better position to get allocate marks. Ne? Yeah. So stick to the 200,000 that is given to you in the set of facts. Ne? From your total assets, we are going to minus your total liabilities. We are going to minus estate duty payable, and then the balance for distribution will come in. Now, practically, you'll see when we deal with the calculation of estate duty. You are going to assess whether in this estate there will be estate duty payable or not. What will guide you? If your total assets are less than 3.5 million, already you know there will be no estate duty payable here. If the deceased was married and everything goes to the surviving spouse, you'll see later that there will be no estate duty payable, because all those things will form a deduction for us to arrive at a net value that is less than the primary rebate. So on your own, you'll assess that in this estate there will be no estate duty payable. But if you see that there will be estate duty payable, once you come under your total liabilities, you pause. Go and calculate the estate duty payable. And that amount that is payable by the estate, you come back to your liquidation account and you put it here so that you can arrive at your balance for distribution. Are we together? Yeah. Now, we don't want to make things difficult for you. I mean, with your permission, if you want things difficult, then you'll tell me. We are looking at a situation where your liquidation and distribution account will have estate duty payable to be 0. But then, if that is the case, then we'll be forced now to give you another question where you're going to calculate estate duty, which is positive. Which one do you want? Do you want to calculate estate duty in your liquidation and distribution account, or maybe have a smaller set of facts to calculate estate duty payable somewhere? Which one do you separate? Granted. So in your major one, so therefore there's no reason to fail, because we are working together on this question paper. Okay. Once you know the liquidation account, you'll see now, ladies and gentlemen, how easy it is moving forward. Are you comfortable with this one? We have a strategy most for this one. We'll never go wrong. Okay, let's move forward and see how easy things have turned out to be for ourselves. When we move forward, what do we find? We find the recapitulation statement. Under the recapitulation statement, we don't distribute anything. I'll just abbreviate and write what? Recap. That is Regulation 5.1D, recapitulation statement. What is the purpose of the recapitulation statement? I think if you know the purpose, it becomes easy to deal with it. You know why we are dealing with it. Even this one, if we like, we can have our own skeleton. On our skeleton, number 1, the purpose of this account is to assess the liquidity in the estate, whether this estate has enough cash to can pay its liabilities. Are we together? Now, therefore, it means that we are dealing now with cash. The first one will be cash. Cash and assets reduced to cash. And to show that you know what we are referring to, this is cash and assets reduced to cash. Which cash are we referring to? The cash as per the liquidation account. As per the liquidation account. Do you see now the liquidation account is coming back? In the examination, we are no longer going to the question paper and frustrate yourself to see, but which are the assets that consist of cash? Already you have done that exercise where? In your liquidation account. And under the liquidation account, we have reflected all the cash in the estate under subheading claims in favor of the estate. So you just get the total of your claims in favor of the estate and carry it forward to the recapitulation statement. So if our cash there is 100,000, you just carry on that amount here, 100,000.
Do you get a mark for specifying the vouchers, or just want the value?
Only the amount. You don't have to itemize them again. You have already done that way in your liquidation account under claims in favor. Here you just give us the total of cash in the estate. Very easy. What are you going to do with this cash in the estate? You are going to pay the liabilities. You are going to pay what? The liabilities. Which liabilities? Liabilities as per the liquidation account. Very easy. As per the liquidation account. Ne? And you are giving those liabilities in the liquidation account. We have dealt with that part. Ne? And then let us make our claims in favor of the estate 300,000. Ne? Let's make it 300,000. And then we set our liabilities. Let's take that amount. It's 200,000. If there was a cash legacy, under what circumstances can we have a cash legacy? If there was a will, ne? It is called a cash legacy because it has to be paid in cash. So we will reflect here. We are going to less cash legacy. And if we have none, just state is 0. Ne? If there is estate duty payable, we are not going to drive cattle to SARS and say, here we are to pay estate duty. We are going to pay it in cash. So that is why it must come under the recapitulation statement. So we are going to less what? Estate duty payable, because we have calculated it by now. And if there is none, then it's nil. Ne? That is when, so these are the liabilities that can be paid in any estate. Liabilities as per the liquidation account, or if there's a cash legacy or estate duty, what else can you pay from the estate? Then we're going to have our number 5. It's either we're going to have a surplus or a shortfall. Are we together? What will happen to the surplus? The surplus will go to the beneficiaries. If there is a shortfall, then we must state that who's going to contribute the shortfall. Obviously, it will be the beneficiary still. So therefore, here, 300,000 of cash in the estate minus 200,000 of our liabilities, then we have a surplus of how much? 100,000. This 100,000 is the one that will be left for distribution. Aha. This is your recapitulation statement. We are merely assessing the cash position of the estate, the liquidity in the estate, straightforward. Any question on recapitulation statement? Very easy. As long as you know that 300,000 is from claims in favor of the estate, then we are fine. We have worked all of this out. Can we move to the distribution account? Yes. Okay. Do you want us to give you a shortfall or a surplus in the recapitulation statement? Or you want a surplus? Noted. Yeah? Yeah, we do it together, ladies and gentlemen. Then we come to the distribution account. This is Regulation 5.1e. Ladies and gentlemen, you should read Regulation 5.1e. Because Regulation 5.1e tells you exactly how you must deal with this part. This is where you're going to give effect to what? To the will, if there is a will. If there's no will, you're going to give effect to the law of interstate succession. Are we together? Now, let us see what Regulation 5.1e tells us how to deal with this part. Regulation 5.1e says you must mention the balance available for distribution. Balance available for distribution. So it's not your choice. It's per the regulation. Now, how will you know what is the balance available for distribution? You will carry it forward from the liquidation account. You see how important is the liquidation account? Then let's assume that the balance available for distribution, let's say for argument's sake, is 500,000. But it's too much, né? We don't want to give people such huge money. Let's make it 90,000. We don't want to deal with big figures here. Né? We are just explaining the principle. 90,000. Né? Okay. Now, Regulation 5.1e says, you must also mention that this amount is awarded to whom? Né? Then we'll say, awarded to. Regulation 5.1e says, give the full name of the beneficiary. The full names of the beneficiary. If you say in the examination, you just say John, we won't give you a mark because it did not comply with the regulation. It's John Smith. Ne? That is why the regulation says give the full names. In other words, the name and the surname. Regulation 5.1e says also mention whether the beneficiary is a major or a minor. It's not your choice, it's the regulation. Whether it's a major or a minor. Regulation 5.1e says, if the beneficiary is a minor, also give the ID number of the minor. If the minor does not have an ID number, then you give the date of birth. But these minors, nowadays, they have ID numbers, most. They are so advanced. Ne? And Regulation 5.1e says you must give the reason. Why is this person benefiting? And what could be the reason? It's either there is a will or in terms of interstate succession. Are we together?
Yes. If it's interstate succession, do you have to put the X and U?
Yeah, the section that...
No. No, don't worry about the... Just say in terms of the law of interstate succession. But when you quote the section, we become very impressed. We say, this student knows his story. No, but whether you don't put a section number or you just put the act, it's only 1 mark. Now, I just wanted to give you extra, but you know, I'll prejudice those who don't know the act. Ne? Yeah. Regulation 5.1e says you must also mention that the award consists of what? Still on the section that you must mention. Unfortunately, if you mention the wrong section, then you create a doubt in our mind. Instead of giving you a full mark, we give you a half.
Don't mention the section.
Ne? Mention the section if you are sure. Pella, we also want to be impressed. Ne? Impress us. But if you are not sure, play safe. Ne? Yeah. Regulation 5.1e says mention that the award consists of what? It is not necessary here, ladies and gentlemen, to state all the assets are gained from scratch. Ne? It's sufficient only to state the headings or subheadings. The award can consist of immovable property, movable property, and cash. Ne? So, but you must also tell us the values of immovable property, movable property, and cash that goes to this beneficiary. Ne? So therefore, you'll say immovable property, which is valued at what amount? let's say the value that we're going to get is this one from the liquidation account. You see, we go back to the liquidation account. So in the liquidation account, the value that we had here was 60,000. Therefore, that 60,000 is the one that is going to be awarded to this beneficiary. Then we say 60,000 here. Are we together? Then we say the award also consists of movable property. Ne? Because you know your story, you know what is the value of the movable property that was not reduced to cash. Ne? You go back to your liquidation account, all these assets amounted to 20,000 in your liquidation account, those that, the movables that were not turned into cash. So therefore, the award consists of movable property in the amount of 20,000. Are we together? Then you are left with cash. With the cash, are you going to go back to the liquidation account? You are going to recapitulation statement. Under the recapitulation statement, which figure are you going to take from our skeleton? Is it number 1 or number 5? Number 5, the surplus. Ne? Let's assume that our surplus there is 10,000. Ne? So therefore, that 10,000 in the recapitulation statement, why don't you take the full amount of claims in favor of the estate? Because the amount that stands to be distributed is that amount after we've paid the liabilities in the estate. Because if you're going to distribute all the cash there, who's going to pay the liabilities in the estate? So the beneficiaries are entitled to the balance after we've paid the liabilities of the estate. That is why we take the surplus from the recapitulation statement. Are we together? So therefore, the surplus will be 10,000. Ne? To see that our balance available for distribution is correct, when we add all these three figures, they must give us the balance available for distribution that is awarded to the beneficiary. If they don't come to this, it means that something is wrong somewhere. So that will give you an indication that we have made a mistake somewhere. Maybe under cash, you are making a mistake of forcing the claims in favor of the estate instead of the surplus. So you go back and check. Are we together? Yes. Because these ones, you are sure of them. Why? Because you took them from the liquidation account. And if you are sure of this cash, it means that your calculation somewhere there to arrive at 90, there's a mistake. Maybe the mistake is in your total assets. Ne? But practically, ladies and gentlemen, if you are certain of the cash in the estate, you are certain of your immovable property value there, because you took the facts from the question paper and the movable property. And here, mysteriously, a balance for distribution gave you 120,000. And you said, balance available for... Then you write 120,000. But when you add all of this, they give you 90. They don't give you 120,000. What are you going to do? I mean, practically, you are sure of this. So therefore, if I were you, I will cancel 120,000 here and cancel it and add of all of this and write 90. I don't know how did I get 120 in the distribution, but this one I'm sure. So when we mark, you are not there, so that we can question you, why did you write 120 there and 90 here? We'll just do what? Give you a mark for the correct answer. Because this one we are sure of it, not so. Yeah. Ne? Make sense, ne? That is in the exam, but practically then you will have to find where did you make a mistake and correct it. Because if you don't do that, interest parties will come and object to your liquidation account. Are we together? But here you have created a way of checks and balances to see whether your distribution account is super. Are we fine with this one? You are guided by the regulation. Everything that we have done here, we are guided by regulation 51E. If you read that regulation, you will never go wrong with the distribution account. By now, you notice that we allocate marks for these ones. Ne? And we have noticed that we have allocated marks for these ones. And we have noticed that we have also allocated a mark for this. So here, you are going to get more marks under the distribution account. Because we allocate marks mostly as guided by the regulation. Are we together? So it gives you an insight as to the mind of the marker when you write the examination so that you don't go wrong. You know, these people are looking for this. This is how they allocate marks. I'm going to give them what they want, and they must give me my marks. Ne? Yes. Remember, if the beneficiary is a minor, ne? Then on the cash will be deposited to the guardian fund. Don't forget that. Ne? Pardon?
Will say so.
Pardon?
Or the trust account, if they will say so, if there's provision for trust in the will, or not.
If there is a will that says the money will go to trust, then it's fine.